हेलो एंड नमस्कार सब लोग आप सभी को। और सबसे पहले रामनवमी की सबको शुभकामनाएं। इन दिस वीडियो आई हैव कवर्ड द derivative data based on the open interest of all participants as on Wednesday, March the 29th closing basis. तो आइए शुरू करते हैं। क्या नए सेटलमेंट में द फर्स्ट सेटलमेंट ऑफ द न्यू फाइनेंशियल ईयर 23-24, उसकी फर्स्ट एक्सपायरी और फर्स्ट मंथली सेटलमेंट को क्या सब ने कैसे कैसे पार्टिसिपेंट्स ने अपने ओपन इंटरेस्ट आगे किए और क्या डायरेक्शन है इस समय मार्केट में। तो शुरू करते हैं हम इंडेक्स फ्यूचर्स के साथ। और यहाँ हम देख रहे हैं कि एफआईआईज में इवन दो वेडनेसडे को काफी क्वांटिटी में शॉर्ट कवरिंग किया है और कम क्वांटिटी में लॉन्ग, बट इन टर्म्स ऑफ प्रपोर्शन यू कैन सी द डिफरेंस। 36 became 15 and 192 has become 154. As a result of that, they are back to, for every one lot long, every one FII going long, 10 lots are short. So they are back to that scary number of 1:10, which on Tuesday closing was 1 for 1.55. So FIIs get into the next settlement, that is the first one of the new financial year, April, with a very bearish scenario. So anything इस बात में सिर्फ एक ही पॉजिटिव समझ में आ रहा है मुझे, और वो ये है कि अगर मार्केट में कुछ भी रैली आया जो सस्टेन करना चाहिए, मोस्ट इंपॉर्टेंट पार्ट, द रैली शुड सस्टेन. So we will see some serious short covering in that case. This ratio will come down in that case. Otherwise, it remains very, very scary with the FII scenario right now. Domestic institutions also did the same. In fact, if we go to see it, every participant was only doing a net square, a gross square rather. There was everywhere we can see last moment squaring off happening of longs and shorts everywhere. So in any way, the domestic institutions again, because they have done a major short covering, did not roll this kind of shorts into April. They have a very high long right now. So in fact, their ratio is for every one, they are long by 5. So that's a decent quantity of long from the domestic institutions, but compared in terms of total contracts, quite low compared to that. And remember, domestic institutions are only doing it for protection of the sin. And if they feel that they don't need to protect their stocks through index future shorting, which is again a very bullish sign from a domestic institution point of view. The prop desk has taken their futures shorts marginally less than what it was on Tuesday. Again, some are long, some are short, so it's equally divided, but net short. The same thing goes with the clients, but the clients reduced it. Remember, we have been saying that in the rally, the clients are going bearish, and in the decline, the clients are going bullish, the opposite way. Here also, we can see the rollover figure has come down compared to Tuesday. There's a much lower, say, open interest going forward from their angle also. On the futures desk, we can see everything was long. That's understood because of the covering which took place. Then in the options, how are they starting the new expiry and what kind of a scene are we going to see? The FIIs are starting the new expiry in a ratio of 1 to 1.35. This was 1 to 1.55 on Tuesday. So marginally positive, further positiveness from the FIIs in the put call ratio, but they still have more puts than they have calls out there in the system. Domestic institutions reduce some of their puts, again a bullish sign. You can see that out here. Marginally bullish from their side. In the prop desk, now this is interesting. Prop decks are neutral because the way the market has behaved in the last 2 weeks, until there is a breakout from this narrow squeeze, which has been there since the last 2 expiries, they are not going with any major decision. They are just standing still and whichever side makes the move, they'll go. They've probably done iron condors or spreads written on both sides, and they've just sat quietly waiting for a breakout on one side of the direction. That's why the volume is also not too much. The net exposure we can see isn't that high. That gradually builds up as the expiry progresses from the prop desk. The clients, on the other hand, even though they are not extremely bullish on the upside, but they are solidly confident that this market will not fall. So there's a large quantity of put written by them, carried forward again from their side. And also from the data, we can see that these are looking like 1:1, 1:1 spreads being done out here. Again, 1:1 spreads being done out here. The start of a new expiry also out here. But if prop clients more bullish, prop desk neutral, FII is slowly coming into the bullish angle in the from the point of view of call puts. But remember, FIIs are more in the monthly series than in the weekly series when it comes to the direction. Stock futures, again, we have an equal quantity of long unwinding and short covering from the FIIs. They are still remain there. And this figure, look at this figure out here, which is almost the same, very little here and there, long, short. So FII is clearly in both the segments of the stocks, they are equally long, equally short, which gets me to a real funny part out here, which is that it reminds me of the scene from the movie Sholay, the iconic movie, Aadhe idhar jao, aadhe udhar jao. And that's what the FIIs are right now doing with the stocks. They are absolutely stock specific, long, short, from their derivative point of view. Now remember, FII derivatives are not like clients holding on to a winning position, not losing. I know clients tend to hold losing positions for a very long time, but a winning position, FIIs tend to hold for not just a couple of days or a week. They tend to roll their longs when they want to, because in certain stocks, there is a limit to entry through the cash segment. That's why they prefer playing those stocks through the derivative segment. And in the derivative, they don't need to disclose which stocks they are long in, which stocks they are short into the public. But in cash, everything comes out. So from the short-term point of view, we can see the vested interest is right now extremely stock specific from the FII test out here. Then we can see in the domestic institutions also, there is, while there was a long unwinding, there is more short covering from them also out here. Even in the stock index futures, we can see everyone was busy in squaring off their position. These traders were not in a roll mode at all. So there's a lot of equivalent factor happening on Wednesday out there. Same thing, client prop desk, not too much of a change. Clients, again, showing a slight bias towards profit booking or long unwinding, mild drop down coming in their long futures out there from the clients. So clients going slightly bearish in the futures segment, but extremely bullish on the call segment, the option segment in the index from them. In the stock calls and puts, the new expiry starts as typical, FII shorting calls, going long in puts. But look at the quantity, it's not much. Small quantity. They will be waiting for some direction to come probably, or let puts premiums get a bit more expensive towards once a direction forms, then they would be looking at some kind of a trade happening in that manner, and results will start pouring in very soon. So again, we'll see stock specific action coming out from them. Look at the prop desk. So this clearly shows you, the domestic institution. So this clearly shows you that in spite of hedging, the domestic institutions have taken a serious long position in index futures and also stopped shorting stock calls. So their entire hedge is now through stock futures and a very marginal quantity through index puts long out here. So domestic institutions clearly are seeing this is not an area to be aggressively short, need not hedge so aggressively from them. Whatever they have, they're quite confident that it's worth it for them at this level. The prop desk again starts the new expiry. Now, this was a decent quantity we can see out. Very large, decent quantity of winding up happening out there. But yet, they also do what the FIIs tend to do, but in a magnified manner in stock options. Decent quantity, but an equal quantity of puts long from them out here. That's basically primarily to protect their longs in stock futures. The clients, those who don't do futures or those who are very aggressive in the market, are going long calls and short puts out here. We can see that they remain bullish as ever. Client settlement to settlement, we see clients going long in calls, short in puts, irrespective of the market direction. So tomorrow, that's Friday, the first day of the new financial settlement of the year, and for the new expiry, the support for Nifty comes in at 16,950 और उसके नीचे 16,785 पर सपोर्ट है. 950 बहुत क्रूशल सपोर्ट है. ये अगर ब्रीच करेगा तो मार्केट में सेलिंग प्रेशर थोड़ा इंटेंसिफाई हो सकता है. और अगर आपको याद है, लास्ट वीडियो में ट्यूसडे को मैंने बताया था कि 950 नीचे और 17,025 ऊपर, ये दो रेंज पर जैसे ब्रेक होगा, अगर आपने कुछ ऑप्शन शॉर्ट कर रखे हैं ये आउट ऑफ द मनी, तो थोड़ा उस साइड के डायरेक्शन में संभल जाइएगा, क्योंकि बहुत शार्प मूव दे देगा. दैट इज व्हाट एग्जैक्टली द मार्केट डिड after 2:15 when it started moving towards 17,100, particularly in the last 45 minutes. So it was a clear-cut warning. I hope it protected everybody. Or resistance for Nifty tomorrow is 17,225. And if it trades above that, उसके ऊपर अगर ट्रेड करने लग जाएगा तो 17,375 तक जा सकता है अपसाइड में कल के लिए. बैंक निफ्टी में सपोर्ट जो है वो 39,700 पर है. बैंक निफ्टी ज्यादा स्ट्रॉन्ग बंद हुआ निफ्टी के कंपैरिजन में. 39,700 अब सपोर्ट हो गया उसका. वो अगर होल्ड नहीं करता है, कोई कारण से मार्केट में ब्रेक आती है, तो द नेक्स्ट सपोर्ट 39,200 एंड द रेजिस्टेंस इन बैंक निफ्टी 4200 जो काफी दिनों से खड़ा है 4200. वो अगर अपसाइड में ब्रेक होता है, then we can look forward to 40,900, which is the next big resistance in Bank Nifty. With that, I end this video. I hope it is of help to you. Please don't forget to like, share, and subscribe to the channel. And have a great weekend, everyone. Bye-bye.